What if I told you that 95% of day traders lose money within their first year? Not break even, actually lose money. Their accounts shrink, dreams die, and bank accounts get decimated. Meanwhile, there's a group of investors who do almost nothing. They buy stocks and hold them for decades. They check their accounts once a quarter. And they consistently beat 90% of day traders without trying. This isn't opinion, this is math. Cold, hard, undeniable math that trading course gurus selling $2,000 programs desperately don't want you to see. Here's a question that separates dreamers from realists. If day trading was consistently profitable, why would anyone with the secret sell courses about it instead of just trading and making millions themselves? Think about it. If you had a strategy that consistently made you 20% per month trading stocks, would you sell that strategy for $1,997 to strangers on the internet? Or would you quietly use it to become a billionaire? The fact that there's a multi-billion-dollar industry selling day trading courses, signals, and strategies should tell you everything you need to know. The money isn't in trading. The money is in selling the dream. Let me show you what the actual data says. A study by UC Berkeley tracked 66,000 households over 6 years. They wanted to see who made more money, active traders or buy and hold investors. The results were devastating for day traders. The most active traders, those who traded daily or weekly, underperformed the market by 6.5% annually. They would have been better off doing literally nothing at all. Meanwhile, the least active traders, those who bought and held, beat the active traders by an average of 7% per year. They did less work, spent less time, experienced less stress, and made more money. But it gets worse. A study from Brazil tracked every single day trader in the Brazilian stock market over a year. 97% of them lost money. Only 3% were profitable at all. And of that 3%, only 1.1% earned more than minimum wage. Out of thousands of day traders, only 1.1% made more than minimum wage. You'd have better odds opening a small business. Now, day trading promoters will tell you those statistics don't apply to you. You're different, you're smarter, you'll be in that 1%. But here's the thing, everyone thinks that. Everyone who starts believes they'll be the exception. The math doesn't care about your confidence. The math doesn't care about your motivation. The math is the math, and it's working against you in ways you probably don't even understand yet. Let me break down exactly why day trading is a mathematical loser for 99% of people. There are 7 specific factors that compound against you, and most day traders don't understand even half of them. Factor 1. Trading fees and spreads. Even with commission-free trading, the bid-ask spread costs you 0.1% to 0.5% per trade depending on the stock and volatility. That adds up really fast with volume. If you're making 50 trades per week, that's 2,600 trades per year. At an average spread cost of 0.2% per trade, you're losing 5.2% of your account value annually just to the spread, before making a single dollar of profit. Factor 2. Taxes. This is the silent killer almost no one talks about. When you day trade, every single gain is taxed as short-term capital gains, which is your ordinary income tax rate. If you're in the 24% federal tax bracket plus 5% state taxes, you're paying 29% of every gain in taxes. If you make $10,000 profit day trading, you keep $7,100 after taxes. Meanwhile, long-term investors who hold for more than a year pay long-term capital gains taxes, which top out at 20% federal. That same $10,000 profit only costs $2,000 in taxes. They keep $8,000. That's a 12.7% difference. Factor 3. Win rate requirements. Most people think if they win 50% of their trades, they'll make money. Wrong. Because of fees and spreads, you need to win about 53% to 55% just to break even. To actually make meaningful profits, you need a win rate of 60% or higher with proper risk management. Consistent 60% win rates are incredibly rare, even among professional traders with teams and algorithms. Factor 4. Opportunity cost. Every hour you spend day trading is an hour you're not spending building skills, advancing your career, or starting a business. This cost is massive and almost never discussed. The average day trader spends 4 to 8 hours per day watching charts. That's 20 to 40 hours per week. If you spent that time building a high-income skill like sales or coding, you could increase income by $20,000 to $50,000 annually. Factor 5. Information disadvantage. When you day trade, you're competing against high-frequency trading algorithms that execute in microseconds, hedge funds with teams of analysts, and professional traders with decades of experience. Factor 6. Psychological damage. Day trading activates the same parts of your brain as gambling. The intermittent rewards, the near misses, the dopamine hits from wins, all create addictive patterns. Brain scans prove this. Factor 7. Compounding works against you. This is the most devastating. When you day trade, you're constantly taking money out of the market in fees, taxes, and living expenses. That money can't compound over decades. Long-term investors leave their money in the market for decades. Every dollar compounds at 10% average annual returns. After 30 years, every dollar becomes $17.45. After 40 years, it becomes $45.26. But day traders are constantly resetting the compounding clock. They take profits, pay taxes, pay fees, and start over. They never get the 30-year compounding magic. They're fighting the most powerful force in finance. Let me show you this with real numbers. Two people, both starting with $25,000 to invest. Person A becomes a day trader. Person B becomes a long-term investor. Let's track them over time. Person A, the day trader, is actually pretty good. Better than average. He has a 58% win rate. He makes 50 trades per week for 50 weeks. That's 2,500 trades per year. With a 58% win rate, he wins 1,450 trades and loses 1,050 trades. His gross profit looks amazing at first, but now let's subtract the real costs that destroy most traders. Bid-ask spread costs at 0.2% per trade, $25,000 in spread costs annually. Then short-term capital gains taxes at 29%, another $25,375. His profit is being eaten alive by costs most beginners never consider. He spends 6 hours per day, 5 days per week, for 50 weeks. That's 1,500 hours. If he valued his time at even $25 per hour, that's $37,500 in opportunity cost. He could have been building real skills. After all costs, he maybe made $24,625 on his $25,000 starting balance. Sounds good, but this assumes he's a top 5% day trader. 95% of day traders don't achieve these results. Most lose money entirely. Now let's look at person B, the long-term investor. She takes her $25,000 and invests it in a low-cost S&P 500 index fund. She adds $500 per month from her job. She pays a 0.03% expense ratio on her index fund. That's $7.50 per year on her initial $25,000, almost nothing. Over the year, she contributes $6,000 additional. The market returns 10% on average. She ends the year with approximately $33,800. She pays zero taxes because she didn't sell anything. Her money continues compounding. She spent maybe 2 hours total managing her investments for the entire year. After 1 year, person A made $24,625 but spent 1,500 hours and experienced massive stress. Person B made $8,800 in account growth, spent 2 hours, experienced zero stress. Day trader wins year 1, right, wrong. Let's extend this to 30 years, a typical investing lifetime. This is where the math becomes absolutely devastating for day traders and the truth becomes impossible to ignore. Person A, the day trader, assuming he even lasted 30 years, which almost no one does, has maybe made $750,000 in total profits over his career. But he's paid hundreds of thousands in taxes and worked 45,000 hours. His final account balance is maybe $200,000 because he's been living off his trading profits and paying massive taxes annually. He's 30 years older and spent his entire adult life staring at charts, stressed and exhausted. Person B, the long-term investor, contributed $500 monthly for 30 years. That's $180,000 in total contributions plus the initial $25,000, so $205,000 total invested over 3 decades. Now watch this magic happen. Her account value, approximately $1,138,000, over $1 million. From doing almost nothing, from 60 hours of total work over 30 years. While having a career, building skills, enjoying life, and sleeping well at night. When she sells, she pays long-term capital gains tax of 15% on her $933,000 in gains. That's $140,000 in taxes. She keeps $793,000 in profit plus her $205,000 contributions, over $1 million after tax. Person paid taxes every single year on short-term gains. He probably paid $300,000 or more in taxes over 30 years. The long-term investor made more money, paid less taxes, worked 1/750th of the hours. This is the math that day trading promoters don't show you. This is why the wealthy don't day trade. This is why Warren Buffett's favorite holding period is forever. This is reality versus fantasy. Now, some of you are thinking, but what about the success stories? What about people who made millions day trading? Yes, they exist. Just like people who make millions playing poker or becoming professional athletes. Are you going to bet your financial future on being in the top 0.1% of talent in a field where 95% of people fail? Or use a strategy that works for 90% of people who stick with it? Let me show you what the wealthy actually do. I've worked with millionaires and billionaires. I've seen their portfolios. I've seen their strategies. Almost none of them day trade, not one. They build and hold. Warren Buffett, one of the richest men in the world, holds stocks for decades. He made $100 billion by holding, not trading. Jeff Bezos became the richest person by holding Amazon stock, not trading in and out. The same with Elon Musk and Tesla, Bill Gates and Microsoft, Larry Page and Google. They built wealth by holding equity for decades. The Forbes 400 list is full of people who held equity, not day traders. Now let me address common arguments day trading advocates make. First, they'll say you can make consistent income day trading while long-term investing is passive and unpredictable. This is completely backwards. Day trading income is extremely unpredictable. You might make $2,000 one week and lose $3,000 the next. You might have a great quarter then blow up your account in a month. There's nothing consistent about it. Long-term investing, over periods of 10+ years, is incredibly predictable. The S&P 500 has never had a negative 20-year period, ever, in over 100 years of data. If that's not predictable, nothing is. Second, they'll say day trading gives you control. False. You're completely at the mercy of the market. More so than long-term investors because you're exposed to every tick of daily volatility that means nothing long-term. Long-term investors don't care about daily fluctuations. A 5% drop doesn't matter when you're holding for 20 years. But a 5% drop in a day can wipe out a month of gains for a day trader. So why do people still day trade? Psychology. The same reason people play the lottery, go to casinos, and buy get-rich-quick schemes. It's exciting. It feels like you're doing something. It gives hope of quick money. Long-term investing is boring. It requires patience. It requires discipline. It requires delayed gratification. These aren't sexy qualities. They don't make for good YouTube thumbnails. But boring works. Boring builds actual wealth. Here's what I want you to understand. I'm not saying trading is impossible to profit from. I'm saying the math is stacked against you so heavily that unless you're in the top 1%, you're going to lose. And even if you are in that top 1%, the opportunity cost of spending 40 hours per week trading versus building a business or career is enormous. You could use those skills to build something with lasting value. Let me give you the exact strategy that actually works for building wealth. This isn't exciting. This isn't going to make you rich next month. But it works. It's mathematically proven. It's what wealthy people actually do. Step 1. Increase your income through your career or business. Focus most of your time and energy on earning more, not trading what you have. A $10,000 raise invested annually beats trading a $25,000 account. Step 2. Spend less than you earn and invest the difference. Aim for saving at least 20% of your income. If you make $60,000, invest $12,000 per year. This is the foundation of all wealth. Step 3. Invest in low-cost index funds that track the total stock market or S&P 500. Vanguard, Fidelity, and Schwab all offer funds with expense ratios under 0.05%. Use those and nothing fancy. Step 4. Set up automatic investments. Every month, Have money automatically transferred from your checking to your investment account. This removes emotion and ensures consistency regardless of market conditions. Step 5. Never sell. Hold through crashes, corrections, and bear markets. The market has always recovered, always. Every single crash in history has been erased by subsequent gains. Panic selling destroys wealth faster than anything. That's it. 5 steps. Not exciting, not complicated, not sexy, but mathematically proven to work over long time horizons. This is how you build wealth. This is how ordinary people become millionaires without luck or genius. Here's the truth that trading gurus won't tell you. They make money selling courses, signals, and subscriptions. They don't make money trading. If they did, they wouldn't need to sell you anything at all. If someone has a trading strategy that consistently works, why would they share it publicly? Every person who uses the same strategy reduces its effectiveness. The market is zero-sum short-term. For every winner, there's a loser. You have a choice right now. Chase the excitement of day trading and most likely end up with less than you started. Or do the boring thing, invest consistently, hold for decades. Build wealth slowly. Become a millionaire by retirement.